Revenue-based funding up to $2 million, $5 million without collateral, no hard credit checks, bad credit, it is acceptable, and lower documentation, as well as alternatives like 0% interest for 6 to 18 months and up to $150,000 in the form of business credit cards. You can liquidate the cash out of these and use them for other investments, as well as another one up to $150,000 in working capital only with a new SBA program out there without needing any collateral. You don't have to be reporting a gain on profits. You can have a loss. Your cash flow doesn't have to be best, good at all, and a little bit more on that. Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert, or you could say a business loan broker expert, and I deal with a variety of services, all types of loans, advances, business credit, personal credit, getting it repaired, getting yourself in better position as a startup, as a non-startup. I help out a lot of companies of different backgrounds and industries, operations, reasons for you using the funds. Will it actually work out or not? What are your plans and your goals, your mission, your values, your aspirations? I care a lot about that, as in you as the individual, the human, the person first, and then in your business. I do care about that. You're not a number to me. Like a lot of people out there say, you are a number, or you are quote unquote just a number. Although you know what they mean, but I really do care about who you are. And in this video, I'm going to get into some of the rates and underwriting guidelines, things that have been changing in the revenue-based space. And I just want to bring it up to fruition so you understand what the parameters are and what you could fall into and what specific buckets of underwriting. So you're not going out there as well, just, I think, and then you start applying anywhere and everywhere and just spreading your information out there like a wildfire, going everywhere and chaotically and trying to figure out, will this work or will it not? Can I trust them? Are they reliable? Are they loyal? Do they really get me and what I'm trying to do in my business? Do they really understand my operations? Why I'm getting this inventory and marketing expenses, and now I'm trying to get more funding. And so you're not giving it to the wrong people, and that's what you got to be cautious of. I'm a very loyal, trustworthy, humble person. I'm a Libra, if that says anything. I'm very introverted, cerebral. That's just who I am. I went to school, I educated myself. I went for sociology a little bit, then transitioned into, chemical engineering. My brain is wired in math and systems, which kind of explains why I kind of just did that a second ago, and being introverted. And then eventually I got into business as I wanted to start a business. I worked in construction manufacturing for some time in my younger 20s. Then I got into a financial logistics role, working a lot hard up here with a huge contracting company servicing HP&P South, still lifting some boxes, physical components of it, not as hard. Sometimes it would pick up, but I'm not a physically built person, and it was best for stability reasons and post-academics and doing other things. And to go to another role, I couldn't get paid more. I couldn't move up another role. The company ended up relieving 50 plus people. Unfortunately, I was one of them, not from my own doing. And I had to go back on unemployment benefits and food stamp cards, and it was not a good feeling at that time. And I just didn't want to continue to go down that route where my family had to depend on, and just go out for a meal and feel like I couldn't give, or if I could, I was very conscious of a lot of that. And just going and paying with an EBT card and not being able to lock eyes with the cashier, and at times I would, but it would make it more difficult. So I wanted to venture out a different route. And before the company went down under, I ended up already starting a passive income business. I started getting into digital marketing agency, lead generation business, affiliate marketing business in the health space. I have these still to this day, other verticals in the affiliate space, and then other ventures. And now this is my primary focus as a business funding expert, business loan broker expert. So what I want to cover now are the details on the rates first, and then I'm going to get into the terms. But revenue-based, if you're unaware about that, I've made content on this. I'll try to link you to it down below. And my questionnaire form will be down below. For those of you asking why I haven't gone back to you via DM here or on that platform, just know I'm in many places now as opposed to before. And my energy and time can be limited sometimes. So if I don't respond back to you on this platform or another one, I would recommend, if you haven't, fill out the questionnaire. And if you have, and if you're waiting on me, then I'll get back to you in time. Sometimes I miss one here or there, but I have a list of people that I'm trying to get back to. And I care about you as a person. I really do. So thank you for being patient with me. And if you need to send me a quick email again, please do so. But that should be accounted for. And sometimes these things happen. So that's another way. The questionnaire would be the best place to begin with. That'll explain more. And I'll get you a very personalized, highly personalized and customized email/PDF response on your best funding option and options thoroughly broken down from an expert. Information that isn't even publicly released. It's very good stuff, guys. That's where you need to begin. So here, the revenue-based, what you should understand, and I'm going to use this as a guideline. I don't even need to look at this. I already have this really by memory. And market conditions, subject to change, rates, and stuff like that. So keep in mind, revenue-based meaning, hey, we're going to advance you a lump sum based on the performance of your month-to-month bank statements over the last 30, 60, 90 days, or in total over 90 days. And sometimes it can account for 6 months of history. It can amount to a year's plus worth, depending on the seasonality of the business and other cases to be made. If it's a higher tier service like an SBA loan, at sometimes they're going to ask for about a year's worth of tax, or a year's worth of course, a year's worth of taxes, a year's worth of bank statements. In some cases, not always. Sometimes they ask for the last 3 to 6 months just to see a historical trend and what's happening most recently. For those, a lot of the times, for more of what you can have on hand with cash, and what bank or what banks, what reserves do you have, what liquid cash, all of these other things that they're looking for. But that's for another time, for another high tier service. Revenue based on this one, we can do just about 3 months of bank statements, 4 months if you're in a specific state, like California. There are a few other ones now too, and a copy of your driver's license and a voided check. And I'll guide you guys through the process on how all of this works. And just imagine that, getting it from an expert. You get a PDF/email document you can refer to. You don't have to read through it all. It can be lengthy, but I'll guide you. Here's the option. Here are all the details you won't even be able to find publicly. And you go, wow, it was a bit, but I'm so happy that I read that, because I know the expectations. And you can refer back to that and reuse that, bookmark it, come back to, and use it over and over again. Win-win. Come on now. That's a win-win. And so you think about it and you go, man, I'm going to save more energy and time. I can go hang out with myself. I can go hang out with my wife, or yourself. You can go hang out with your significant other, or however that's presented. And I'm speaking of that in the future sense on my part right there. But that is something that you want to account for, and it can relieve a lot more of your stress and trying to figure it out on your own. So revenue-based, you get in advance. You've likely heard them called revenue-based loans, or merchant cash advances is kind of what they're going by in the market. And this is an advance based on your future receivables. So if you're doing $25,000, how consistently are you making that, and what could we be projecting you're going to be making month to month in sales? Will you be making that more or less? So they're taking a future percentage based on your future receivables or your credit or whatever you're making, adding into the business, what kind of revenue is coming in and from where it's coming in, how you're depositing. And sometimes there's that, and then there's also the daily, weekly schedule. There's bi-weekly, monthly, but it's very rare to get those. Very rare, really non-existent, and still hard to get. So you're likely going into the daily or weekly repayment schedule. And to get away from that and to do a monthly or even a bi-weekly, the online bank term loans, equipment loans, creative credit-based financing, SBA, yeah, you have those, and just a few other ones out there, but it's really hard to get those. And many people have to submit more documentation and they can't qualify for. So revenue-based, you have an idea now, month-to-month performance of your bank statements. They can usually lend between 75 to about 150 or 75 to 200%, 50 to 75% though. And that depending on if it's like trucking underneath 20,000 a month right now, and I'm going to get into this soon. Like even if you're over 20,000, even if you're closer to 50,000 and above, it's difficult. A lot of the approvals are between 50 to 75% in transportation and trucking. Depositing frequency, a lot of expenses, especially in their equipment, things go down, minimal equipment. They can't even get lines of credit. Even construction companies, and I'm going to get into that in a moment, on the revenue requirements. I'll go to the comments, guys, soon. Give me about, I'm going to try to wrap this up, and I'm a slow talker. If you've been around me, you know it's hard for me to go like this speed, but I want to get this done in 10 to 15 minutes. I'll try to interrupt myself and go into the comments You guys are not interrupting me. And so here, let me go into the rates on the expectations because the markets change. And there will be more information down below. I'm not going to get into all the specific qualifications, detail per detail. I'm going to be just getting into a majority of the underwriting guidelines. And I've created content like this in the past. Market conditions change and you'll have that. And there are different products out there for different underwriting. Just know that. So this isn't being based on everything else. Collateral or credit. Because there's the three you can do. Cash flow, collateral, or credit. You either have one of the three, two of the three, or all three. And I look at maximizing your potential around one and even multiple now and in the future. And if none of that, business credit. As business trade credit, as a startup, and even as a non-startup, you should be building that. So here, what I put together, and I'm using this again as a reference point, and I put here are more of these rates in our underwriting process. Current market conditions are and not set in stone due to market conditions, your file, and more. But you're seeing the most up-to-date below for the year, and this is for like the most accounted for good, great profile, like the accounts, everything looks good, and it's just, that's what we're looking for, and this is what you're going to expect out in the market. So I put here different rates, and what we're doing is we're basing this off of what's called factor rates or a total payback. You know what interest rates are. You've been paying them likely, and so depending on what you're doing. And so this isn't amortized as a traditional business loan. This is not an ARM. This is not predicated based on the Wall Street Journal, the Federal Reserve, and that. This is a little bit different on how you can get this and what's regulated and what isn't, and it's very legitimate. And so here we work off of total payback or factor rates between a 1.18 to about a 1.69 or 1.55. It can vary, it can even be a little bit higher depending on the risk. But that basically means, let's say you get $20,000 in funding, then you were given an association of a risk based on other factors we'll get into of a 1.27 or like a 1.29, which is actually really, really good. To take 20,000, you probably got approved for more and got less. To get a 1.27 or 1.29, that's really hard to get unless you're an A-tier client. And so what you're paying back on 20,000 at 1.29 is at least 29,000 with some added amount. And so can you make more than $29,000 in your repayment is the question. Or are you just getting $20,000 and you're barely going to get $25,000 out of that money that you're taking, and it's probably going to happen in 9 months after your term and maturity has expired in 7.5 or 8.5 months, depending on what you were given. We can do 3 to 24, if not 4 to 24 months. If you guys want higher terms, there are those lenders in the space, but it's very rare that's going to happen. Don't expect it. Go higher, you're going to go into an online bank term loan with 2, 3, or 5 year usually repayment terms, or you're looking at an express loan, you're looking at an amortized up to 10-year SBA loan, equipment loans, creative credit-based financing with 3, 5, 7 years, 2 years, 1 year. We can do those, and there's a few other options that we can even add as a combination of. But once I see the file, I know how to pre-underwrite. I know what the best lenders and underwriters are looking for. So Questionnaire would be the best place, and I'll get back to you if I haven't, and if I have, you know where to look for, and I can remind you of if you haven't. So here, 1.18, and this is, keep in mind, this is the best you're going to see out there. I usually beat most offers. I'm very competitive, myself and my team. Usually we beat the offers that are out there. Others out there will overpromise. They'll shoot for the stars. They're going to send you an offer. They might have it in contract already at that stage and tell you, hey, there's a $50,000 offer, but then they just switch it up on you in the final underwriting. They go, They base it off and say, well, there is something, and all this time they knew it was going to be of a less of an approval. So instead, you're getting $21,000 to $22,000, which is what it should be. But you're over here now with me complaining that, hey, I saw this over there, or I haven't seen. I'll help you get the best. I can work with the lenders directly, and I also work with them indirectly. So I house these lenders, myself and my team, that I already have those direct lender partnerships with, great personal and business relationships with, but it's better to look at it in an in-house setup this way for more flexibility, better early payment discounts, maximum approvals at the best terms and rates, and we're pretty much saying, hey, we want this one, but we're going to pull from these other ones, or there's only one realistically. Well, let's see if these two come in. Okay, this one's seeing this. Okay, this one wants to work more. It's going to help you. It's going to do a lot better. And the strategic partnership and roadmap you have for short and longer term. Longer term is most important. Because if you need to build from this service to then an SBA loan or to an online bank term loan, or if you don't want those or you don't want them to take that long and submit all that, we can work here, try to refinance later, or keep this amount, try to do an additional amount with like 0% interest cards or do a few variety of situations. We can do that depending on the file. So here, 1.18 to a 1.29 total payback. Let's just keep it simple. Factor rate, I'm not going to get into the whole factor rate definition and the whole of for every dollar spent and the $1.29 that you're giving back and a lot of that. There's a lot more ways of translating that information, but just know that that's the total payback on what would be expected, like that example earlier, 20 on $29,000 there. And so a paper lending clients for a 1.18 to a 1.29 total payback. Keep that in mind. You're getting $20,000. You're expecting back to pay just a minimum of $25,000. You might even think that's too much. A lot of business owners go, that's not even a lot. So you're expecting me to pay back $25,000. What's my term? What's my repayment? What's my daily? What's my weekly? What's my bi-weekly? What's my monthly schedule? How much do I already deposit per day? Excuse me. How much do I deposit per week, bi-week, monthly? What's going on in the activity of my banking and financing activity? If you guys don't understand that, don't understand the frequency, don't understand the finances of the business, why are you coming here complaining about something when you don't know your own money? Like, I do everything. Yeah, I work on everything, but can you delegate that? Can you afford to, or do you have to do everything yourself right now? Do you really understand the numbers to at least that capacity? I'm not saying you have to be a guru, but understand money in, money out, and a lot more things. And we're just speaking at a monthly revenue level. Can you imagine if we had to go to P&L statements, interim financials, cash flow statements, and I do analysis on all this myself and my team, even before it gets to my team. And so if you don't even know your tax returns, you can't even tell me what your revenue you're depositing is. You can't even tell me what your money is going to be making for you taking this money. Like, what are you doing? Or if you do know, you go, hey, I'm not going to make anything. I'm not going to increase 20 to 30% on this. I'm already at 25%. Okay, well, if it's not going to make a significant difference, but you're seeking funding because you know it'll make a change in this segment, or it'll do enough of a tipping point, or it'll keep you even, but you need the money and the benefit exceeds the repayment, then it makes sense a lot of the time to do that. So 1.18 to a 1.29, a paper lending clients, FICO credit scores that we're looking for right now in this market. And this is the very best, guys, and it varies per lender depending on the industry, depending on the negative days. Are there any negative days? A lot more, and then I'm going to find you the best lender for it. No scam, none of that crap, extra fluff that these people bait and switch. I don't even know why they have or how they have the energy and time to do that. They're just out for themselves, and they're really not good people. And so here, and character matters to me, everything. So FICO, to get 1.18 to a 1.29, it could be even 1.30. It's like a rough right there, or even a 1.31. And we have to view a few things. These are clients who have 720 plus FICO credit. I want to see 700 is a good point, but 720, 725 is better. That's what we're shooting for. And if market conditions were to change, I'll share with you that. But it's generally going to be more or less the same thing you're going to be seeing. So this is clients with great revenue, and we're going to add a combination here. Excuse me. If we go over 10 to 15 minutes, okay, this is great information, albeit you do want to hear this. Clients with great revenue over 50,000 plus monthly. So 50,000 and above. That's what we're looking for in an A-tier client. When you're going to an A-tier lender, it's no use for me to start listing all of these names unless you go, I shouldn't have applied to them and I shouldn't have done that. I can do that all day long and kind of go into what they look for specifically on each and every one of them and what they're looking for on this one, on this file, on this file, on this file. But you're seeing the standard in the industry, and it can vary a little bit, but I'm going to help you get the best that's out there. And so here, clients with great revenue over $50,000 a month. I don't want to hear you say, well, I did $50,000 6 months ago, but in the recent 3 months, you didn't even hit $50,000. Oh, well, I hit 45, 48,000. Yeah, that's 45 to 48. Who said we were rounding up? And so they're not basing it off the projection of, well, once you did 50,000, like 8 months ago, you're going to do. It could look like that, seasonality, and a lot of reasons why that happened. Contracts lost, inventory still sitting on the shelf, equipment, old, new equipment, maintenance fees. There's so much that can happen in a business. Payroll, I can go on and on about everything, and I've really heard it all, to be really honest with you guys. And I know the operations just about of every business, it can vary too. There's segments to each and every one of them. But once I know the problems, I'm asking the right questions, because as an entrepreneur business owner, that's what I'm supposed to do. So clients with great revenue over 50,000 monthly, excellent FICO, Like I said, 700 plus, but really 720 plus is what we are looking for. And you've been in business 24 plus months or 2 years is what you can expect as a payback rate. And that's what we're coming back to, is the rate. So 2+ years time in business, not 1 year, not 4 months, not 6 months, not 2, not 3, not 1, but 24 plus months, or I can say 12 by 2, 24. So 24 months, 2+ years is what you can expect as a payback rate. Now we go into the 1.3, we're away from that, and this can also bleed into an A paper. And if just because you got 1.29 and less doesn't mean you're not A paper. Sometimes it's even higher in some circumstances because you may have other positions and you're associated a higher risk. And there's other things we need to look at and calculate. It's all this stuff, guys, that's very reasonable. A lot of you guys are being unreasonable. And it's just because you don't have the education, or you're like, well, I thought because I had 20 years in business and I just had a recent month that went down. Like, yeah, you in your recent last 3 months, you might be 20, 25, and then one that's like 50,000, like 25 and 20, and then now 50,000. And then we look at the months and we go, that 20,000 was the most recent one. We're in June now, and so that happened in May. And so what's happening this month currently? And the months before that, you were higher, but then now you were lower. So you're doing a lot of this. And if you're not consistent, and it's better to see increasing revenue trends as opposed to decreasing. Decreasing, we can still make a case for, but when you have decreasing, we even make a better factor when we look at the lowest month in the last 90 days is what really we're looking for. And we can look at the average too, and then kind of base it. But if the average is too far away from the lowest monthly revenue, like again, you're saying you're doing 50,000 average, but you had a $25,000 month. The other ones were like 50,000, 60,000 and above. That's 25%, or that's more than 50%. You can say, well, 25, 50, 60, if we base that more than 50%. So that's gone. So what did you expect to happen? And so here, 1.30 to 1.39 rates or total payback, it's equal to B paper, lending client, which we're looking at a 620 FICO to 719 FICO score needed. There's a range for you to meet to be considered B paper. And there's some variances on this that I'm going to go into. And I've helped out a lot of clients, and I know this stuff very, very well. And there's more that I have to do on my back end aside from this. So there's extra stuff that I look through. So 1.4 to a 1.45 equals C paper lending clients. So there's tiers to lending, as you're seeing, A, B, C, D, E plus tier clients, you can say so. And you're classified under each one of these. And if you don't meet their underwriting guidelines, they're either going to decline you or try to give you an opportunity to get less, as opposed to this other lender would have helped you even better, or they're just going to completely wipe the file and go, what'd you do come in here for? Probably didn't get help through a broker. You probably heard about us somewhere else, and they're not going to get you best. They're going to get you a higher rate, lesser terms. You don't have that relationship in the door with someone else like myself and my team. And so there's a lot you got to go through. 1.4 to 1.45 rate. Now we're getting higher. C paper lending clients. That's equal to a 551 FICO to 619 score that is needed. So we still are working with bad credit here, but 551 at that minimum range of the C paper. And this is just based on those FICO scores. A 1.46 to a 1.69 now. Although we tried just to go up to a 1.55. For those of you who go beyond that, it's because you've just applied and you've tried everywhere. You've just been declined. And there are other outliers that we're looking at. And if we gave you a chance, it was likely going to be higher than 1.55. Just keep that in mind. When people ask, well, why? I've been trying and you don't understand. Yeah, I get the story, but we're also basing it off of what you're doing currently. We can't just base it off of this glamorous story where you're going to take $20,000 to $30,000, and because you're the prince of the UK living in the US now and you run a business here, and because everybody else over there loves you and over here nobody knows you too well or doesn't give you that same respect. Like, yeah, I love that, hearing it. But like, I could be friends with you because of that and all this, but when it comes to doing this part, my part as well, like, does that make sense? It goes without being said. And just kind of read between the lines on that. And so although we do that, it does happen. And this is considered a D paper lending client. And we're normally seeing 500 to 550 FICO scores are needed. And when it gets past that, as I mentioned, everywhere you've likely been declined and you're considered too high of a risk. And here's a little bit more added on that. So 1.31 to about a 1.49, excuse me, not sure why that's happening, payback, and 1.55 plus up to a 1.69, and if not a little bit higher than that I've seen. B to C to D paper. So we're connecting all of them more or less together, as you've heard about just recently, as I went into. And then B paper in total, it's a client, yourself, or someone else with revenue above 20,000. Although I like to see 25,000, and that's what they're basing it off of. 25,000, and I've even seen some lenders look at 30,000 and above, but you're not at that 50,000 for specific industries and clients. 50,000 even isn't considered A tier for some. If you have everything, the time and business, the credits, the revenue, some are looking for like 75,000 to 100,000 plus, like with trucking and a lot of companies that are looking for those revenue requirements and other things. So 25K plus, you're wanting to shoot for, if not more. Good FICO, 625, but we're willing to look at 620. So that's kind of where the bartering or the change in helping with lenders are looking for, is the rate. They can bring down a little bit and be somewhat considerate. And the terms is going to become a lot more harder to get. Like the rates are trying to be more adjusting in, but the terms, like it's a harder case to be made if you don't have the right details and everything. It doesn't look that good. So somebody in the construction business some time ago who would have received 15 to 18 months is now getting more closer to 12 to 15 months or 10 to 12 months. I'll go to the comments in a second. Actually, I'll read that now. Yes, with private equity, direct lenders, private investors. Yeah, I'm doing a lot of that. Right now in this market, equity and liquidity. Do you have any commercial real estate or investment real estate that you own? If you're willing for me to help you out on that, I'm more than happy to. And I did speak a little bit about why me, so I won't kind of go into that now. You guys have a perception, and if you've been following me for some time, but I've been in your guys' position, trying to seek financing and doing things like that underneath different entities and doing things the way that they should get done. But in the beginning, it wasn't always like that. And if I would have known better, I wouldn't have given information like that and being bombarded. And knowing what I know now, things have changed. And so here you see that part. FICO scores, we went in that. Here's, okay, so FICO 625, but we're willing to look at 620. You've been in business 12 plus months or 1 plus year or years. C paper is a client with 525 plus FICO credit scores, or we could see 551 plus as seen above, as what we've gone into in a little bit. D paper is a client with below 525 FICO or 500 in this market, and a few adjustments there. The rates you get, they vary depending on your FICO, time in business, other credit issues such as past bankruptcies, if anything, or number of current delinquencies, and how long ago the bankruptcy was is as important too. It's like SBA loans, looking at it for like the past 3 years, something that's just most recent, and you haven't showed us like any kind of payment history since then, and it's just a hard case to be made. It's going to make it very difficult to approve you, and just be careful of that. Or number of current delinquencies, lender partners, they will take into consideration your time in business and monthly revenue dips, fluctuation, increasing, decreasing trends, cash flow month to month, and more when determining your rate. Other issues that may impact the rate you get are number of current funding positions, like number of non-sufficient funds, NSFs, that's what it stands for short, number of negative bank days, number of inquiries on credits from other lenders, daily balances, along with a few other factors. So you can only have no more than 5 non-sufficient funds or negative days in like any of the last 90 days. You can only have 20 regular banking days. And would you had it in April? That's so recent. You had 5 to 6 in April, but the other ones were clear. That's just so recent. It wasn't like, let's say, since now we're looking at February, March, April. If it was February and it was like less than 5, yeah, okay. If it was more than 5, is there a story behind why that happened? But still, at that point, it makes it very difficult to approve. Be very careful. Bounce checks, overdrafts, taking money out. You don't have money there anymore. Be very cautious of a lot of that. Also, most recently, the state of our economy and the market, very hard right now. That's why you bring up a good point with equity and any kind of liquidity. That's very famous right now. I'm helping quite a few people, whether it's crowdfunding, equity crowdfunding. It's a cash out refi. If that's something you have in mind, I can do that. I do a lot of that. Huge market right now for, and it's very reasonable. I'm not going to get into all the parameters on that. I know all that stuff very, very well, like the rates right now and everything, and why it'd be best for you to do. But it comes down to your reasoning why you want to do that, like reasoning, and then financial reasons, of course. if that's sufficient enough ROI, cash flow, opening up more cash flow, probably will invest in more real estate. And so you're trying to pay off other debts, other mortgages and payments there. And so it just depends and varies on what you have in detailing. And I'm doing like a lot of land right now. Land clients are huge. What you're building on that land, what kind of land is it? It's underdeveloped, raw. It's past underdeveloped, but there are a few contingencies. Resale of that land if nothing is done with, or what you're trying to do, what you're trying to build. A lot can go on, residential, commercial. So terms, they are usually dependent on three things: business type, revenue, and credit. A and B paper here, there's a weekly/daily repayment that you would expect. Like I said, bi-weekly, monthly just doesn't happen if you're trying to get other. It's not necessarily the payment structure, guys. It really, like for some businesses more than others it is. Like if you're depositing only once in the week or bi-weekly and it's a bigger payment or whatever that is, but you can qualify for an SBA loan, we're still going to have to evaluate the cash flow of the business enough on also a global debt service coverage ratio and a few more things that I'm doing myself and my team. But the case can then be made, well, I want a monthly repayment because of my depositing frequency, or this is going to happen in the next couple of months that my deposits are going to lower. So if it could work, that's another situation. But a lot of people, like, you can afford to do that. We wouldn't give you something that you couldn't afford. You just don't know maybe the finances. Maybe it's something, you pattern recognition, month to month, something changes. You get a new product. You're not sure how it'll perform. You have an old product. You're changing. And there's transition phases to everything, guys. So weekly, daily repayment, 12 to 24 months. You must have 50,000 plus in monthly revenue. And we do look at the lowest, not just saying the average. So we're looking at that. 675 plus FICO credit score, although I like to see 700 plus on those normally is what we're going to want. But 675, we're willing to take a chance and take a look at it. 1+ year time in business. C paper, weekly, daily repayment. So you're still within that weekly and daily. You're not in that only daily yet. We're getting there. And so this is 7 to 11 month terms. So 12 to 24, I've even seen up to 36 months, but that's just very rare with these. It won't work unless you're doing like bank term loans and go to the bank, online banks. Even lines of credit won't work that way unless you're securing it. Even if you're securing it with collateral, that's likely not going to happen, depending on what kind of receivables, though it could. But you got to build, and you have to have that relationship to make sure you increase. It's kind of like getting credit cards when you're going to apply for an increase, and if that's what you should do or not. So 7 to an 11 month term, you're seeing there, you must have 25,000 plus in monthly revenue. That's what I'm looking for a lot of the times to get to that stage. I know I said B paper earlier, 20, but 25,000, and it's a combination of B to C. So if you're really, a lot of B tier clients are really C tier, a lot of C tier clients are really D tier, a lot of A tier clients are really B tier. So it kind of just meshes in, and I'll see the details of it. 600 plus FICO credit score, 6+ months time in business is what we want. You can get in with 4+ months time. If you have less than that, 3+ months, there's specifically another one. Sometimes they want 6 months. And your depositing is at least 3,000 minimum. If you're doing 5,000 minimum, we can work with a higher tier lender. 5 to 15,000 range. There's a lot of people who get complicated in that. There's a lot of reasons why people don't take that money, even what they get the offer for. It's like, it's just a lot of energy and time wasted, because a lot of them don't end up doing anything. They end up having like the littlest things that they can afford to do. They just don't do it because they don't trust themselves enough. That's honestly what it is. It's the business finances, but at that level, the people don't even trust themselves enough to take that. They try to confuse something, and they try to do it because of the early payment. They're gonna pay an additional $2,500 if they don't pay it off within the 30 days. Well, that can be a little bit daunting, because if you're not making enough money to make an early payment on this, well, of course, it's gonna be like a balance transfer, or it's gonna roll over like a line of credit. Although it's not that, you're not gonna have enough. You're not gonna be able to justify it. But now you have enough time to justify paying. But if your month to month is like already where it is, you're the person who's going to continue just to create a lot of friction and resistance. And there are those points in certain steps, and there's parts where it doesn't even need to belong there anymore. And so I look at reducing that for our energy and time. D paper, daily payments, 4 to 6 months. Now that's where we're getting into daily. And here you must have 15,000 plus in monthly revenue, but albeit 5,000 plus. You're really considered D paper. So that can be adjusted. We're going to say 5,000 plus monthly. Others would look to see 15,000 minimum. It just depends on what those lender revenue requirements are. 500 plus FICO credit score. Like 450 we can work within too, but we have to see the file. 4+ months time in business. Excuse me, but realistically, at a lower level of revenue, you should have 550 and above a lot of the times. So I kind of just go into a few points here. No prepayment penalties. I'm not going to go into all the qualifications in this video. I won't get into examples. Like right here, I give an example to a client at 150,000 at 18 months with a 1.2 rate, and they're a really good client. They were given 600,000, but they ended up taking 150. Over time, they can get more, come back and get more, or what their next transition part is. But their daily repayment for that amount was 513, but they got a weekly at 2,565. For their type of business, very manageable. What they were taking with that money and making more with, of course, monthly, $10,260. Another business like you might be in the $3,500 to $4,500, the $2,500, the $6,500 range. It just varies. Now let me go to the comments, and then I will. I'll go to the comments, and then I'm going to read a few things here from what I jotted down, and a lot of the stuff here that I know. Private lenders, private investors, they can get their money from banks from other ways too. How they recirculate their cash by giving money and getting more and getting their returns and then giving that money back to others. And there's other ways that they allocate their funds. I think that's what you were asking. I'll get into startup soon, but bio link click questionnaire, that's where I would get started. And if you have, and for those of you who have, I will get back to you. It's just a matter of time and energy to do that. I have quite a bit going on right now. But again, if you guys are wanting the best, that's the best approach. That's what I would do. And there is, if you're not making any kind of, if it's based on more financial projections, cash flow projections, profitability, and all this, that's fine. We can do like creative credit-based financing. Not sure where is your credit. Do you have a range you'd like to comment on? Maybe not a specific, if you don't feel comfortable with that. Appreciate you. Thank you, Alex, for sharing. How does somebody start a business without knowing anything, Hector? Yeah, and I understand that very well. It's a very general answer. I can go deep into this. I want to get into this next topic really quickly. You can say it in so many different ways. You got to understand the person first, though. You can't get into telling somebody, well, you don't have an education on this. You got to go learn. You got to go far back and peel the layers of who that person is and how they've been programmed up here. So I can tell you, be resourceful, have resources. Go invest 20 hours into YouTube per week, or go to class. Why didn't you go to class? Why don't you study that way? And so also it's important getting the right information to making sure they know how to start a business, and I help out people with that. I'm not getting into the step-by-steps in this video because I'm going to get into some of the other things right now. But yeah, there's different ways that question can be answered, but if you don't know the person, it makes it difficult to just say, here's one way. If this is not best suited for you, this is another way you digest information. There are many ways. Just making sure you have accurate, up-to-date information, though. If that's the case, if you're depositing automatically daily, that's a healthy sign already. Now, how that's working itself out, that's another question, of course. I'm not going to expect you to answer that right now. I'm going to jump into something else. Have you tried to receive funding in the past? Non-factoring, yeah, there are plenty of others. We just have to make sure and validate the cash flow. We have to validate the depositing, what kind of deposits that are going into the account. See if how it is true deposits, is it not true deposits, stated income. Can we count it as overall income? Where's it coming from? Found? What do you, MoneyLion, Square? Are you doing Zelly transfers? There's so much that we have to focus on, or Zelly deposits and all that. But Yeah, there's like SBA loans, there's quite a few other ones. I can go on and on about a lot of those, but I'm going to jump into this for a second. Thank you for the follow too. Appreciate that. Thank you, Hector. And I kind of have that feeling too. I don't contribute a lot myself into like lives. When I go to a room, I'm the introvert who just observes. I'll like chat in the chat box if I need to help somebody, but not always do I. I'm always doing other things while I'm listening in. So appreciate you doing that. I really do. So let me jump into this next part, and then I'm going to close up 5 to 10 minutes. I got to get going. I'm going to go on a walking and a jogging a little bit before it gets dark out. Although yesterday, 8 p.m., it was still light out. And the sun setting, and that was very nice to see. So other factors that we consider on top of what I mentioned on the factor rates are daily ending balances, number of the lender positions, if there are any. If there are not, it's much better. Although in this market, what I'm seeing a lot of, if anybody's asking, do you see a lot of people with multiple loans? Yeah. Specifically one service, like the advances / term loans, those notoriously right now. People can't pay off their positions. They can't even make payments fast enough. They're bouncing checks. They can't even demonstrate they're making enough payments, or they're paying their own providers, and they have a lot of other debt that they have going on and other obligations outside of their business, and it's lingering on, and it's actually hurting their cash flow. And other businesses are in a different position, but then you look at a reverse debt consolidation, very expensive. There's before that, there's debt restructuring, where you can try to drop your payments between 20 to 25, if not 40 to 75%. Maybe it doesn't drop second to one position, 3 to 2 positions, 2 to 1, however many we can go up at. Trying to get an existing advance to pay off 2 positions is like very hard to do, and you haven't paid over 50% of the funds. The remaining balance in total of the 2 does not equate to even half of what you'll get if you got a 50% more than what you have in the combined advance positions. If you can't get double the amount to pay that off, it just makes it difficult to. And so you have to look at like equity and liquidity, like somebody had mentioned in here, and I remember who. I'm just saying that. But you have to think about, what do you have, or who can you leverage? It's about who you know. It's not always about what you know. In my space, I have the combination of them. For me, it started about what I know, and then it evolved into a little bit more about who I know. I had the who I know, but I still had to learn a lot about this. But connecting with the right individuals and yourself, and if at any point you guys need somebody, or if you have somebody, or you need to find a way where you can earn a percentage, you can refer someone, and I'll be more than happy to give you a percentage if that's how you want to work it out. I'm very reasonable. I'll share with you what those entail. Very reasonable, loyal. Don't worry about that. I got you. I'm a guy who does the work. I don't have to say. I'm not a wordsmith. Watch me do this. That's all I got to do. Let me handle the numbers. Let me handle this part. It's done. Now here, as that varies, positioning on the lender positions, the lender type, time in business, high risk industries right now, and we're seeing a high default rate with some of these. There's many more of them that I can list. But 53, 63, 48%, I'm seeing a lot of that recently within year over year. And one of those businesses, and this is the one that I'm seeing like a very high default rate. Default meaning you can't make the payments. You've missed one or more payments and you just can't make it. You've defaulted. There's a past default judgment in place. There's a court order. You haven't been able to pay that off yet, but you're looking for more funding. Yeah, but that was 5 years ago. But you haven't made. Did you even know that was there? Well, no, I didn't think I would have to make that payment. I declared bankruptcy, and okay. Now you're in this position, and so you've had a recent bankruptcy. There's a lot of problems. There's a lot of legal issues now you might be going through. That it's going to make everything that much more difficult. And if you're already a hard-headed person and you can't get this through your head, I don't want to be that person to say that, but like, I don't want to be. I'm an introvert. Like, I don't, like, character, please. Like, the character is the part we need to focus and improve on, and it's okay. We have to look at those things because it makes a big difference in your business. And that's in the trucking business. 53, 48, 60%. It's high in that business. Trucking industries, I'm not going to get into all the reasons why, but if you're in one, you probably know this. I've helped out a lot of trucking businesses, and I specialized in trucking for a very long time. Like that was my primary focus. I know all the operations pretty much. In a lot of other industries I do too, very, very, very well and excellent. And because of experience funding them. It's not like just seeing it from a distance and I heard it from someone. No, I'm actually in there understanding their actual operations and what they're allocating funds for in their business operations, finances, product market, development of products, new income revenue generating streams, inventory, the list can go on and on. And so that's what I wanted to say to that part. And for those kinds of industries, transportation / trucking, they're going to be paying a higher rate. So the whole 1.19 to about a 1.4, or that's going to be difficult, but it could be 1.28 to a 1.55, depending on the type of client that I'm bringing in. And then there's a higher cost of funds. That's going to be pretty standard, but there are early payment discounts, but an additional amount you're paying, that's another story. And 50 to 75% on the monthly basis is what you're going to get. So the approval amounts for trucking, a lot of the times, if you're doing like under 20,000, even under 50,000, and even beyond 50,000, like there's one recently for 600,000 and a $400,000 approval, high tier trucking companies that could only go down this route. And they were getting like 200,000, 300,000 off the 600 or $400,000 that they were doing like per month. And so on their lowest month. So sometimes it's more higher than 50 to 75, but it's a hard case to be made. It's a very high default rate. And right now with a lot of trucking industries or trucking business owners, they're having difficulty with having any kind of liquid assets, liquid cash, no reserves. They're burning through their cash fast, high expense business, a lot of stuff that's happening with their equipment, a lot of costs associated, and then you have payroll and you add other factors in. It just makes it too high of a risk of a business. And so 50 to 75% is normally what I'm seeing, and on their lowest month. And we look at the average. So if it's the lowest month, then that's the number we consider. For those of you out there who are going, well, 4 or 5 months ago, and if you don't know this, you don't know this. I'm not laughing at you. It's just like a repeat thing, like serious. And I'm more than happy to help educate you on this. 6 months ago, you were doing 110,000. Okay. Now you're telling me in April you're doing how much now? 55,000, and then just a month before that one, you were at 20,000, and then 25,000, like 20 to 55,000. Okay, you're increasing your revenue, but why did it happen on a $20 to $25,000 month? What made that jump to 55 or so thousand in depositing in your revenue? Or if it were the other way around, 55,000 back in February, March, then you're doing 20. Now you're at 25 or 15,000. Like, when are you going to pick back up? You were picking up at that time because of this, because of these contracts. Now you don't have that. Like, how are we going to base it off that $55,000? That doesn't make any sense. And so at most, you probably get $20,000 to $25,000 at that point. Can you get that? A $10,000 a month trucking business, getting $500 to $7,500, or $3,500 to $7,500, more or less. So you got to start somewhere. The dollar isn't stretching as far as it used to. Cut a brick of gold into $1,000 in value. Here's $1,000 in value. Same brick of gold. You just cut it into 1,000 pieces. Now you have another 1,000 that you're cutting on the same brick of gold. That dollar is only stretching out so much, and now you're giving these little, like cutting a pie into twice the amount of pieces. Each person is not getting enough. They're going to ask for more, but there's only one pie to go around. So your money in this market is not going far enough. It's just not. Expenses are rising, costs are rising, cost to produce, cost of goods sold, what you're selling for, what the profits are. Your profits, you're bleeding into your profits. A lot of business owners are, and there's some industries more than others. I'm not going to get into all that now, but I see it every single time. So who'd rather to work with than an expert who sees this stuff on a day-to-day basis? A lot of my work I did earlier in the morning. That's where I focus. 3 to 4 or 5 hours of work, consistent. That's what I do every single day, and I get it done. And so here, on a monthly basis, 50 to 75%, and that's their first funding for truckers. So truckers, that's the reality on their first funding. Now, we can push past that 75% if it's not your first, if it's your second or your third, but it's making it harder to when you're not showing us the revenue is not correct, the stability of the business isn't in place to try to do 75 to 200%, 75 to at least 150%. For trucking doing under 20,000, as I said earlier, rates 1.28 to 1.55 in many cases. If it's past 1.55, which I see a lot of because truckers are getting declined everywhere, and if we took a chance on that, it could be higher than 1.55 up to like 1.69 rates. So that's an outrageous amount that you're going to be paying. I don't recommend people take money at that point. I really don't. And I'm not here to say, hey, you should take that money. If it doesn't make sense, it doesn't make sense. And I'm never once, I'm being very honest, never once I've said, just take the money. No. If I understand that this is a better use, this is how you're going to use it, then you can do that. So trucking, transportation, that falls underneath that category. Give you guys an example there. First time around, and that's how you want to do it. If you really needed like 600,000, but you can only start off with 200,000, come back and get more, probably double that. Probably get 300 to 400,000 at that point, depending on where you are positioned. And then that's how you build. And if you need to get to $1 million, how do you get to $1 million? Can you do it faster by using this money, recirculating that money, enough of that money to then make more with it? Now, if you catch yourself in like going backwards with cash flow and insufficiency and just not going the right direction, that's where it can become a problem when you're trying to get these and they won't work. You're not breaking even, or the numbers don't make sense, but you needed a temporary setback. You can do that. You're going to go backwards a little bit to then come back up. You're depositing and you're making $2,000 per day, or you're depositing that amount. And then you're saying, well, I'm already sucking up my cash flow. So if I took another repayment, that's going to take out another $300 to $50 to $500 a day. And I'm already paying this other provider. So I'm going to only be left with $1,000 or whatever the amount is. And you think about that and you go, well, what can I do with the money that I'm getting? Can I even make more with it? And will that help bridge even more cash flow? Sometimes it sucks it up if you're not using it correctly. Truckers never get lines of credit, usually don't, unless you're working with like an Amex. Amex bought over Cabbage, if you guys were unaware of that. So if you guys are a member, or if not, that's where I probably would be looking in this market. Perhaps some credit unions, although credit unions is going to make it can still be difficult, and you won't optimize and get as much as you need, and how to continue to build that relationship up with these private lenders. And there's more fees associated, other costs of doing business there. And there's quite a bit more, and if you can even get approved. So trucking, real estate, never get line of credit, never gets a line of credit. Construction, unless you're doing 100,000 plus per month. Like if you're doing 6 figures a month, 700 plus credit, your minimum 400 to 500,000 in annual gross revenue. We realistically want to see $40 to $50,000 plus per month in revenue. Counts look clean, no negative days really, none of that. We're seeing how the money's being moved around. Is this adequate enough to give you that money? 2+ years time in business is best, although 3+ years is what a lot of those lenders. Trucking is like 5+ years, like even less we can try to do, but it's just so high of a risk for that one. Construction is another one that I'm seeing. Real estate for like fix and flips, passive investments, fix and flip. I was going to say fix and sell. I was thinking about another one. You're holding onto that property before you're flipping anything. So that's what I was getting at. Rental properties, you're doing, if it's not that and it's more of a property management business because of how the money is coming in and going out, cash flow reasons and stability of revenue, consistent revenue, those are the companies that usually this works out in their best interest for. Not get lines of credit unless great credit. Property management, as I mentioned, better if fix and flip investment. Consistent revenue is what we want to see. We may be able to you may have an asset holding company, and there's a lot of different ways we have to look at that. Industries that are hard to get approved for, used car lots, rental, used car sales, very hard industry, very, very hard. I've tried and I've gotten some of them, but I've had a lot recently too, and it's just I've even had business owners who are generating 2 million, 5 million a month, literally, but their depositing was shady. It was just not good. They didn't know, like, on a financial level to get funding, like what they needed to do, and I told them what they needed to do, and they were more than capable of rerouting. And sometimes they change things, sometimes they don't, and so it's going to be hard even for like the SBA loans for those types of businesses, and already how you're depositing and you're doing high ticket sales, like, and that's the only product you have, and that's what you're based on making money on, and the turnover and the huge deposits usually is the concern too with a lot of those businesses, and verifying sometimes that revenue is hard, depending on the business as well on other ones. Any type of investment groups I'm looking at, you can kind of chalk that up to imagination on what you would consider an investment group. But for one of them being like financial, in the sense of like a loan company taking a loan to then give somebody else a loan, like there's a lot more. You can get into like Bitcoin, Forex, trading, how money is being moved, and now like it's just too hard a lot of the times, too high of a risk. Borrowing money to lend to others, lawyers, attorneys, and they're doing less than 50,000. But if you're doing like 50,000 and above for that space in lawyers and attorneys, any kind of accounting, even accounting, we can do less than 50,000. But it's going to be hard a lot of the times. This is where I kind of go into, and I'm using this as a reference point, where certain rates, they're going to look at it a little bit more conservative. But that's kind of for me to know. That's not a lot of what you guys need to know on that part. Okay, so like I kind of went into this, and I can go deep into each one of these, but background checks, financial default in the past, I can go deep into that, each and every one of those. I can spend like hours on. But background, we're willing to like pardon, quote unquote, we're willing to work with if you've learned. I've had a lot of clients, great clients, who, some of my best clients with like a criminal background, I have learned literally. And the stories just, I'm very emotionally controlled, but when they get into things, and I don't ask them to share that, like I don't want to be that guy to ask, but it helps too. And just the stories there, and what they put their emotion, they put everything, because they've come from something that they've had to learn from, and to readjust and to fit in with society again. And look at them go, they're building. And even if it hasn't happened yet, we can see what could happen, but a lot of projections there, and we have to be cautious of that. I heard something on the, I don't know if that was here or there. Credit eligibility. This is more on my part that I need to know, and I have like these connections with my underwriters and my lenders that they can give me more information on, but that's just for me to know. But for credit eligibility, I'm not going to get into these issues because it can become more like of a personal liability, and the lender tracks back to, they don't want to be held liable, and it can be problems. So they usually don't open up that information, but I know what they're alluding to. Sometimes they give it to me, but I can't share it with you because they know me personally and in business. But it could be a lot of reasons. So if there are credit eligibility reasons, could be default, it could be bad credit, it's just current payments, you're behind on mortgage payments, there's a lot more. I'm not going to even get into all that. The 10 best industries that I'm seeing. Oh, or there's another one too. If you're getting like revenue declines because low revenue, insufficient revenue, I'm not going to get into all that right now though. Quite a bit. 10 best industries that I'm seeing right now. This is kind of where I'm going to try to end. There's a little bit more, but 10 best industries that I'm seeing right now and getting funding. Huge. And I'm doing like each and every one of these you guys are going to hear from. I've already funded like a galore, and I'm consistently doing it now, some more than others because of the times. And a lot of industries I've literally funded, but one of those being construction, repetitively, and depending on the subcategory and the operations of those businesses, construction companies are at the forefront right now because of the season too. If construction, like, speaks for itself, construction, where you're working and what kind of environment, and we can talk about products, material, and cost and stuff like that associated makes things different. But construction, masonry, plumbing, roofing, concrete, you can really chalk it up to a lot of derivatives. And where they're getting the most benefit is those who, in all these industries, is what I'm seeing the most benefit in, is 3+ years time in business. Joaquin, good question. How about a laundromat and you are a mechanic? Are you trying to start a laundromat business and you're working as a current mechanic? I mean, that would be good. It would make sense with why you're getting a laundromat. And is this going to be a complete startup from the bottom up, or will this be like an acquisition? And I'll kind of go through this part here. And so then you have, almost lost my spot. 12 months is okay for construction. For a startup, then yeah, it's okay. That can work very well for laundromats. There's costs. Yeah, I've funded those businesses. I'm not going to get into all the costs associated, income and expenses. And I see a lot of this stuff. If I ever ask for like P&L statements and I help people understand those and like what could they do better, that's what I love. I like looking at those things and doing that. And so, yeah, that can work out well. I've had people ask me that same question. I funded plenty of clients that I have great personal and business relationships till this day. And yeah, it just depends on, since you're a startup, it'll likely be based on credit-based financing since pre-revenue. And I'm not going through all my questions to ask what you do and don't have right now because I want to move on with this. But just know that that is an option. Now, what you use your funds for and how much you need or what do you already have, I've seen what a lot of people in the laundromat business are going to need and when they can really make an ROI on a lot of that. And so here at construction, 12 months is okay, less than 12 months is good, but I'm seeing a lot like with above a year, 3+ years even better in that industry. Like construction is that, trucking 5+ years, any transportation, but you can get things done underneath 5 years. But that's where I'm seeing the best approvals coming in with the best rates, and everything else looks good. With FICO being strong enough, depending on the type of tier that you're at, you always want to shoot for good credit, no matter what. Good offers are getting there. No lines of credit unless 100,000 and above, like I mentioned earlier, 700+ credit, better time in business, and it could be the sub niche in what you're doing. Food truck businesses, restaurant businesses, catering events, all this stuff, really cool stuff, and you can even combine this. These services like food trucks, now you have buildings you're leasing, you're moving into, or you're moving away from. You have a catering department. There's so much we can consider in the food industry, but 3+ years a lot, like I'm saying, with construction similar to that, is working. In depositing, that's why it's what you're getting out of these is depositing. Retail, restaurants, construction, it's iffy because of how you're depositing, when you're depositing, how much you're depositing. So that's one. We have three, healthcare, doing a lot of that right now. I actually have one right now for a large amount, a potential amount in the millions and even more. Lines of credit for them, yes, it is applicable because of the line of credit requirements. And then for healthcare businesses, that's really good. Healthcare facilities, adult care homes, in-house. I can go on and on about that. Number 4, huge. I'm doing a lot of that too. Landscaping. If you're in the landscaping space, huge. That is very helpful. And this is kind of information, guys, that is just for me to know. But I want you guys to know, like, what are the industries right now that are like these are the industries. If you're trying to start a business, I'm gonna go start a landscaping business, or I'm a 15-year-old, I'm gonna go cut lawns and I'm going to move from there into another field. Boom, I'm going to learn the operations of this, take my experience, and take it somewhere else. There's so much you can do. Landscaping, a lot of that. Look, sunny outside. How many people are outside right now cutting the grass? I cut my own grass. I can do that myself. I've been doing it for a very long time. Hire somebody, sure. But look, how many people are outside right now? You can walk down the street. I can walk down the street right now, and I can find people cutting grasses. I don't even hear the lawnmowers here in this neighborhood, but sometimes in the morning, man, they're louder than the roosters are. And I have my alarm. Sometimes I just wake up without it. I'm like, what? I sometimes hear somebody cutting the grass at 9 o'clock. I'm like, There's no light out. And then you like look out, they don't even have like any kind of lighting on, like just out in the dark, just cutting the grass. Well, it doesn't happen frequently, but you probably have seen or heard of something like that. Guess it's not uncommon anymore. When people get off of work or whatever they have going on when they could get to it. 5, retail. Huge. Depositing in retail like consistently every day. Like when I look at those credits and debits, like in addition on top of where else they're getting money from, like how they're putting money in. Huge. Service industries. Think about like my industry, servicing. You're maybe in a nail salon, hair salon, beauty salon, financial services space, and you can say so many things about that part. Number 6, automotive repair. Excuse me. So automotive repair, I've done a lot of that. Still doing a lot of that. Huge for that. Mechanics. Not used car sales, and that, like I said in the beginning, it can be very difficult. Number 9. Oh, here, I think I skipped this one. I think that was number 7, excuse me. Wholesale and e-commerce. So that's another one. I think I skipped 6, 7. I think this one was 7. Here, let me put this here. There it is. Okay, yeah, so I did skip that one. So it was 6 there to automotive repair, and then 7, sorry, here would be wholesale / e-commerce. Like, what are you buying? What are you buying in bulk? Like, costs associated and what people do in those markets. Very big right now. Booming market. Digital, like, booming right now. Huge. And I'm in the digital marketing space as well for one of my businesses. Number 9, manufacturing. Oh, number 8, excuse me. Oh, wait, this should have been like this. Medical kind of falls into healthcare. So that's one I can add. So healthcare is a subdivision. We can add that as one of them as well there. But then we have here manufacturing. Manufacturing being huge. This is one that I've been doing plenty of recently. And a lot of manufacturing companies that can't go even the SBA loan route, they try to go the revenue-based route. Also because they need faster funds, their equipment, their maintenance of equipment. They need a quick injection of cash. There's quite a bit. And then we have staffing for medical, employment, those type of staffing companies. Plenty of that as well. I've seen plenty of it coming in and helping them on those. And I was just thinking of a specific staffing company, and they did a huge overhaul and got them a sufficient amount. It wasn't what they were looking for originally, but like any business, we had to start off with a lot less, around like 50 to 75K, and then moved it up from there. But that's as much as I want to say there. I want to make sure I covered every one of these. Service industry, 7, automotive repair was that one. 8 was wholesale and e-commerce. 9 was manufacturing. 10 is staffing there. Trigger leads. In 48 hours, what ends up happening is after 48 hours, the offer is usually expired when we give you an offer. And it's to remove those of you who are not serious. And for those of you who, the lenders need to move money. And so they need to move their money, get their money back to give it to someone else. If you're not serious, sometimes we can push past those 48 hours and do that, especially with myself. It's who you know. In the consideration of the circumstances, moving into a weekend and you still need another 24 hours, you can wait till Monday or Tuesday. And what happens is after 48 hours, you're not protected normally from these credit bureaus that do what's called the trigger leads. Trigger leads meaning that they stored your credit, and so they can give this information out to other people, brokers, organizations, lenders, and they're giving away your information. And it's not caused by me. It's just unfortunate that this happens, and now you're getting called, emailed, and you don't trust them. You think it's coming from me. They act as part of me. They say, hey, I'm working with Michael. This is Michael, or I work with this company, or they don't do that. But be very cautious. You don't want somebody like that to do things with. So they can do that, and they can call, give that information, people buy that information. I don't do that. FICO scores and lenders, what they're looking for, what you've paid off in the past, what's your risk tolerance. That's always what the lenders are asking for. Certain ones are more risk tolerant than others. Construction, 3+ years, 700+ credits, better chances of a line of credit with 100,000+ per month. in most cases. Real estate fix and flips, 100K plus per month to qualify. In many cases, still hard though for those. Monthly payments, 32 to 36 months perhaps, but it's hard to do in this market with these kinds of products unless you're looking for another type of service to go through. Personal to business, if you're moving money from there to there, we have to look at that, and that's not counted as true revenue. You have to get a business checking account and depositing those 3 months of bank statements or revenue into that account for it to be counted. Here's where I go with this. That's why you can't qualify for specific providers, even like automatic setups, because they don't work with those specific banks. What happens is they're not going to allow you to withdraw money. Like those banks that you're set up with, no matter if it's a setting or something you have to change, charger, they won't work with you because they're not set up to withdraw money from those systems. And so how is the lender going to get their money? And there's more things than just withdrawing. Reapply, making sure you apply and you reapply correctly. Industries that we don't want to really see are like adult, I can't say the word, but on this platform, but adult type of businesses, as you guys can leave that into interpretation. And sometimes you may think what's this one? Okay, that one's a little bit better, but this one is not the one we want to look at. So that's where I'm going to leave it at. Let me go to the comments. I think I have something more here. Hold on, 1 second. Okay, no, this was from a client I was helping out earlier. Yes, I do SBA all the time. For what type of business were you looking to get an SBA loan for? Anar, how are you? I'm doing good, thanks. Yeah, and right now, it's been a long day, but I'm always good, no matter what. And so I always find a way, and there's always a silver lining to everything. And so even when things don't, like you find a little thing there that you're like unhappy about, but I'm always good, even great, doing better than good. So life is too short, guys. Do the most that you can with your life and live it to the highest, but also have it structured. Don't just be chaotic unless that's what you would rather prefer. But yeah, I am doing well. Thanks. Nice. Have you had a long day? Did you go through here? Let me look at something very quickly. And I can't do it here. I have to look through the desktop app. But let me move this over. There it is. Okay. I need to view something there after I'm done with this. Yeah, to get more information about the business funding, it's in the questionnaire. So again, the bio, or for anybody who's watching later on, if you are too, on YouTube, it'll be down below in the description. But bio, sometimes TikTok doesn't display that. TikTok is kind of like all over the place now. They're not helping they're helping the creator to, it's just a different platform. And so there's certain content that they would rather prefer than others, and I get that. But sometimes it doesn't display the link. And if it doesn't display the link, it's okay. You guys can also go to my site. It is viralfundingsolutions.com. Email me, first name Michael, M-I-C-H, A as in Adam, E as in Edward, L, at viralfundingsolutions.com. So my first name Michael, M-I-C-H, A as in Adam, E as in Edward, L, at viral, something going viral, fundingsolutions.com. Yeah, it just doesn't do it. Here, let me see if I can put this into the comments. 1 second. Put this here. I'll even put I'll even put my email. I don't know if TikTok would dislike the whole link tree thing. I have to be careful about sometimes what I post here. I know. It's like, really, for that? Yeah. So that's my email address if anybody wants to send me an email. And what I'll end up doing is sending you that questionnaire, as you are aware of. So I'll send you that questionnaire and what you need to get filled out. Like I have literally everybody do. There's a process in what I do. And I just want to make sure I'm most energy and time efficient and on all parties. Discord I do have. I just haven't been in it recently. I was in it in a clubhouse. I'd have to look at like the whole name and all that. I don't have it right now, but I'm not on there frequently. You want to get in touch with me, on platforms where like I'm a little bit more frequent to be on, like sometimes here, but I'm not on the DMs all the time. But in the email inbox, like that's where you want to appear. Like out of all the platforms, you want to appear in my email inbox because I'm checking those consistently every single day on repeat. I responded to a lot of people today that wouldn't have been able to receive a response if they hadn't have done that. Like they would have still been waiting. But some people, like they really just get it without me telling them, like this is the fastest way and this is what I would recommend you do. You're purchasing a UPS store franchise through an SBA. Yeah, and the fact that it's like I'm not gonna start asking you why. Like I understand like what you should look for in a business. I can ask you what it was about a UPS store that intrigued you. Do you have any past experience in that? Or if not UPS, maybe it's rival like FedEx or a different courier service. But yeah, the SBA 7A is an option. We just have to look at the acquisition costs. We have to make sure everything is in the buyer and seller's budget and the financials of the buyer, of the seller, and what we're looking at from the buyer's perspective. I'll start to intertwine all of the different documents in my mind on the tax returns and all. So that's what happened. But buyer and seller documentation, I'm not going to get into all that now. I can share it with you in time. There's a lot that goes on there. There's even seller financing. If the SBA doesn't work, then we can work on a creative credit-based financing, or the owner can try to do an online bank term loan or an advance loan, or an advance, I should say. And their name would be on or it's like their name is still on the title of a property. Their name is still on the actual business. And they're going to be getting a payment themselves, but they're going to be helping you in that transition phase. And then you getting listed as the owner. So there's different spots to each of this. Equity though, liquidity, huge. If you guys have equity in property and you're trying to purchase a business, whether you're using that as a down payment or the whole way through, that's big. You can send me here. Would you be okay? I don't know if you would like to provide me with your email, because people can, I don't know if you're okay with that. I don't think anybody's going to be in here like sending you emails, or unless they got it wrong and they sent the wrong person an email. If you would like to, you can put it in the comments. I don't know if you feel comfortable doing that. Okay. So I'll give it a second and then I'll answer here. Oh yeah. And they won't, what's the word? Barge? Is it? Yeah, I think that's the one. They won't do that. If it's to go up, yes. To go down, it's harder to. Even if you have the experience. But yes, exactly. I was in between that. And it's just my Spanish speaking, English speaking. I speak a lot more English. I'm fluent in both. I'm a whitewashed person. Grew up in Orange County, California. I live in Washington. I speak Spanish very well. But it's just like I don't, like around parents I do. They speak English too. Brother, other family members are strictly Spanish. Budge is the word. Rain fart, long day. So I'm going to get going here in a second. But if anybody wants to ask any last questions, maybe I give it up about a minute. I know I'm waiting for an email. Unless you won't do that, you can send me an email. Let me, again, put it in the comment section. No, I don't believe I did. Were you going to put it in the comment section here? Unless you tried reaching out to me just now. Yeah, I don't know. See, I don't know. I can see it myself, but it's not showing. That's why I kind of moved away from here, from doing lives, and I went to another platform because of the reach too. But Yeah, Michael at viralfundingsolutions.com. Make sure it's the right one. Like right as in spelled correctly. So it'll be my first name, Michael, at, and then viral, something going viral, funding without an S, and then solutions with an S at the end, .com. So Michael at viralfundingsolutions.com. And I can wait here to see until the email comes through. I'll give it a moment just to make sure. Here's another fellow friend. Here's somebody that I've been helping and we connected on a different platform. Just want to make sure that the email does come through. Can you put it in the comments what you did type into the email? If you don't mind. I didn't get the first part. I just got the at part. Here, let me see if I can do this. Here's the follow. So would it be the first part? Would it be anar at anarenterprise.com? Or you're putting your actual like TikTok username? I was talking about the email. If you were emailing me there. So let me actually do it this way. I might just send you a private message if that's what's best. So let me make sure that everything is correct. Oh, okay. Here, let me do this. So if I have this correct, it would be like you said, and I have it written here. It would be A as in Adam, N as in Nancy, A as in Adam, R, so anar, at anarenterprise.com, right? So if I were to even email that, it would go to you. Okay, that's what I'm questioning right there. That's what I want to know more of. But you can email me, or I'll just find you on TikTok when I have time to come back in here and try to send you a DM, and then you can kind of give that information. That's the part. Okay, and then it would be the at anarenterprise.com. Let me make sure I have this. Okay, so it should be anar.enterprise at anarenterprise.com. Hopefully I have it that time. I did not see that. It's weird. I don't know why it doesn't show me. And it's far beyond me asking TikTok these things, like sending them feedback. I can't see that part. Let me see if I scroll up though. Yeah, but the 20 to 25%. Yeah, because well, what are the costs of acquiring that business? They're looking at cash flow. True profits now is what you need to base that acquisition on, not projection of profits. That's one part, but true costs, true profits, expenses, payroll, a lot of these things. So it's a question of where that other 5% is going to come in from. And if you're already strapped for purchasing that business, that says a lot about like cash on hand and what extra cash you're going to have, not just for purchasing the business, but already enough money left into the banks and stuff like that. Okay. Thank you. Let me do this. Okay. Yeah, I have that right. Just want to make sure. That's a long email. So is it, no, is it really that at anarenterprise.com? So anar.enterprise2010 at anarenterprise.com. See, I'm trying to, yeah, see, the thing is I'm getting just a little bit of it. It's okay. If you don't want to add it all, that's fine. We'll do it in like the DM if that's okay with you. And usually most people do it that way. They prefer to. How about we do 30 more seconds? I do have to get going. It's getting quite dark here. I'm going to move and I'm going to like move out. So I'm going to go and walk. That's what I was meant to say. A lot of things going on up here. You know what I'll do? I'll just send you an email because it's kind of confusing me. Oh, is that what's happening? Oh, okay. So I'm trying to like fit in the pieces here. It's not allowing the complete email in the complete comment section. Okay, so is that the front end? That's the front end, like before the at, right? Of course. Why would it go after? Okay. Well, it's really getting late. I'm gonna get going in a little bit. Oh, okay. See, I see what you were doing the whole time. Okay. Then I'll wait for the next part. So oh, I mean, yeah, I got that first part, the one where you said anar.enterprise2010 at. I thought you were gonna put a second part after that. Or was that all of it? Oh, okay, there we go. That was the missing link, my guy. That was the only part that I needed to know. Everything else like was self-explanatory, but that could have been anything. That could have been Gmail. That could have been, what are they? Outlook.com, at hotmail.com, at yahoo.com. I mean, yeah, it's so easy to say Gmail, of course. But that's just the part that I was, okay, that's the part. And probably others were thinking like, okay, it's easily I could have just thought out Gmail, which was my first thought. But it could have also been your business name at your first and last name, or first name and then business name and then at your business name. We do, and you're pretty much doing that now. And I'm not gonna use the word I'm trying to, but you got to be smarter than the algorithm, I guess. It's like a whole other game you have to play with TikTok. It's like those cyber movies, like, are so confusing at times, but it leads you into another scene. How did we get here? But yeah, so I will reach out to you and I'll look for more information, whether it's in the DMs here and or via email. So I have it here, anar.enterprise2010 at gmail.com, and I'll be doing that soon. After I'm done with this, I'm going to go do other things. I really got to take my mind away from this. I actually have my campaigns that I'm running. I'm just looking at a campaign here. So that'll be everything. If I did miss anybody, I do apologize. I greatly do appreciate you and everybody else and what you have going on. I have to look at information first, though. I don't normally just start a phone call, just so you know that. The reason being, that you've been in here, you've heard this before, so I won't go over it, is because I need to understand what I'm looking at a lot of the times first, because everybody wants a phone call, and it's just like, although that's there, although I do get a lot of people that I'm helping, is it the best use of my energy and time? It can be, but that's also a split that I have to be careful and cautious of. And so that's why I have a lot of people submit my questionnaire to begin with. So I'm going to send you that very likely, and that's where you should begin. And filling that out, I'll then be able to look it over, analyze and evaluate it, and then I'm going to do my process. I'm going to put my skills. So I have skills to this. If you guys thought my skills was calling or speaking on the phone and being a word, I'm not like that. I come from think of me as like the silent partner in a business who can run all the marketing and advertising for a company, who does everything through the products, understands the value ladder, like understands how to move, how to create offers, do a lot of that. I love doing all that. System iteration, mathematics, doing all the stuff on the back end. I do a lot of the stuff on the front end, but that's why I have it designed this way. And I actually bring the true skill set. And I'm going to show you. At that point, a lot of the times clients can just get started from there. You can reply back via email, text message, and or if it takes a phone call for clarity and for a few things to go over, and if it makes sense, it makes sense to do. Other times it really doesn't, and where we are and what we have to get to, and then there's already a complete sense of understanding your operations and what you're doing there. And I'm going to be there for you. So I'll show you those options and stuff that wouldn't be publicly released and so forth. But it'll be in your best benefit. It'll be like a guide you can reference and use as much as you want to. And you're going to know what you can and can't qualify for. And try to be as accurate as you can on that questionnaire so that I can see it from the beginning. Like, let's reduce waste in terms of redundancy. Like, people who submit my questionnaire, I'm like, they didn't even give me the name of what industry are they in. I had to ask somebody that today. And I had to go find their business online. And there was no indication of what kind of business did they run. They didn't have a website. They were just listed here, but that didn't tell me anything. And so I just spent 5 minutes looking for somebody's type of business. Although I'm going to go look, even when I have that information, I'm going to still take some time to give people some love on their Facebook profile when I can and if I can. So it's like this whole thing where I just put 15 minutes to doing that. So that's how I'm going to approach it. And that's what I'll do. So do you go by Anar very quickly? Do you just go by a first name Anar, or is there another name you prefer to be called? Got it. Appreciate you. Thank you. Just want to make sure I address you correctly. Things are done well. You have a great evening too. Appreciate you. Thank you very much for joining in and commenting. I really do. I don't say that easily. And I do care a lot. So appreciate you for doing that, and I will be reaching out soon. Thank you, and also thank you everybody for being in here, whether you commented or not. Appreciate you very much. Thank you all. Have a great evening. Let's have a great remainder of the week, and we'll take it from there. Take care.